it's Hector again. Today is Friday the 27th of April. It's about 1 p.m. Euro time, and I'm gonna comment on a setup on the GBPJPY, that's the sterling pound against the Japanese yen. It's a trade that it looks good from a technical point of view, but I'm not gonna take it. I'm gonna tell you why. Well, first of all, let me show you what price has been doing in the 4 hours chart. Okay, as you can see, I'm scrolling over the screen. As you can see, price has been moving on an upward channel in the 4 hours chart for the last 5 weeks, something like that. You see the channel very clear. It's marked in pink on the chart. This is the live chart at the moment. This is a real-time price, and I'm gonna zoom now a little bit for a clearer view. There it is. It's a similar formation that we saw on my Euro JPY trade a couple of days ago, with a W formation with a higher low off the channel bottom. You see that? Another one of my requirements is that moving averages are in the same direction, or in order: the 30 moving average, the 50 moving average, and the 100 moving average. Price never goes below the 100 simple moving average. Anyway, this is all explained in my course, in my website. But if you've been seeing my videos, if you've been following my videos, you already know about this. Anyway, we have the W formation. We have the retracement trend line broken. You see the retracement trend line is begins here at the highest point of the previous swing high. Goes down, retraces up, forms a lower high there. Then we have our retracement trend line. Then forms a higher low. See the higher low? And goes back up. So what do we effectively have? We have a triangle. Alright, you see the triangle? So this trade is based on a W formation, triangle formation, right off the longer time frame channel bottom. Here is where we break the triangle formation. Boom, we break up, we retest the channel bottom. Okay, and now we are about the channel bottom. I'm sorry, I meant the triangle top. And now we are about to score new highs. You see, this was yesterday's high. So as soon as we break yesterday high, okay, meaning that we've broken up, we've retested the former resistance trend line, and now it's acting as support, as you can see here. I'm gonna zoom in a little bit more. Okay, there it is. This is still the 4 hour chart, guys. Breakout, retest, former resistance now acting as support, and bang, shoots up. This is yesterday's high. As soon as we break above, that would be a valid long entry in the direction of the main trend. We are basically trading a triangle breakout in the direction of the main trend. Main trend is up. You can see the moving averages. Alright, why am I not gonna take this long right there? Because today is Friday, and because it's 1 p.m. in the afternoon already. Fridays after post lunchtime, it's you just don't want to be in the market. Why? Because it is known that large players, meaning fund managers, the big guys working at the big investment banks and stuff, sometimes they, if they've been in positive throughout the week, meaning that they've already scored some positive pips for the institution that they work for, they sometimes they work there, they close out their huge positions, and that might cause the price to spike up. Imagine you were a big guy, okay? Imagine you were working for, I don't know, Goldman and Sachs, or JP Morgan, or whoever the hell. And imagine you were, I don't know, let's say 300 pips in profit for the week on the GBPJPY, which is this chart. Well, it's post lunchtime, Friday afternoon. You are gonna leave the office in a couple of hours. You've scored a nice profit for the week. You're gonna pocket a nice commission off this trade. And are you really gonna keep your position open throughout the weekend, or would you just close out at a nice profit, bank some money, and basically, get flat on this position? Well, of course you would close. And what happens when someone who's trading millions and millions and millions of gazillions of dollars closes up a position? And what happens when it's not just one guy but many of them? Well, you might move the price. You might see some heavy spikes, some chaotic spikes in price behavior. And that's what usually happens. I've seen it so many times that about 3-4 p.m. Euro time, right after the US market opens, you see some very crazy spikes on the chart that you just wouldn't understand why they happen. It's because of that reason. Okay, large players are closing out their positions and they are spiking the chart. Also, well, it might happen the opposite. No one, since it's Friday and the week is about to finish, and it's just few hours for the markets to close for the weekend. No one wants to get in a trade at this time. So what happens? The chart remains flat, just chopping around, moving sideways, not much action. So there is a high chance that either you're gonna see some crazy spikes, and that's always dangerous, or there's just nothing gonna happen. You are gonna remain flat until the market market closes for the weekend, meaning you are not gonna score any profit today, meaning you're gonna remain stuck in a position, and you're gonna hold it over the weekend with no profit but to show for, really. And it's always dangerous to keep a position open over the weekend. I don't know, imagine someone or some big international moves happen on Saturday or Sunday. I don't know, a terrorist attack, or the president, the chairman of the Bank of China releases some news, or whoever the hell, something crazy happens, and you're in a position and you cannot close your order. You cannot exit your position because it's weekend and the markets are closed. So you just don't want to be in the situation. Don't get yourself into that situation. This is one of the golden rules of trading. It's common sense. You can trade, you definitely can trade Fridays, but only until lunchtime Euro time, which is until 8. I'm sorry, until noon London time. Okay, do not enter any trade beyond noon London time. We've just passed noon London time. It's actually, the clock is ticking noon there in London right now, and you don't want to enter any more positions for the weekend. Big boys are known to not trade on Fridays. They are the professionals, and there is a reason for that. Amateurs trade on the later half of London of Friday. Professionals don't. So stay away of the market. I'm not gonna take this trade, even if it triggers right now and it goes 50 pips in my profit. I don't give a shit. I'm not gonna take this trade. Okay, guys, be wise, be safe, and just say no to Friday trading. All right. Okay, guys, have a nice weekend, and I'll see you on Monday. Bye bye.